See, I told y'all it was coming. Right here in the United States, some crazy things are going on. And they're going to continue to go on, and they are affecting small business owners and even consumers right now. So I'm going to tell you exactly what is happening right now, or really what already started and what is continuing to get worse right now, who it's going to affect the most, and what you can do about it. So first, let's take a look at this article. It says U.S. lenders lose $46 billion as customers at Capital One, Citi, Chase, Synchrony, Discover, Citibank, Bank of America face billions in delinquencies. And as you can see, this is just the beginning of January that this article was written. So it says defaults on credit card loans are rapidly increasing in the United States. So this is dealing with personal credit card debt. But even this is still affecting the business side of things, and we'll get to that in a second. So you can see here, financial institutions are currently seeing credit card defaults reach a 14-year high. It says here bad credit, but it really means bad debt, has forced lenders to write off a massive $46 billion in loans that are believed to be seriously delinquent in the first 9 months of 2024. So 46 billion is a lot of money for all these banks to lose. And you can see that this is over the first 9 months, so the first 3 quarters of 2024. So this really doesn't tell us what's going on in the last quarter of 2024, but we'll get to that in a second. But I want you to think about that. Imagine if you had lent out a bunch of money to somebody, and then all of a sudden you know that you're not about to get that money back. And then you also understanding that things are getting more expensive, costs are going up, and you have all this money that you lost out on that you won't get back. How would that make you start operating as a person? But let's continue. So let me guess, your business is stuck and feels like it's not growing, and you need more funding to take on bigger projects and cover your expenses. But everywhere you go to apply, you keep getting denied, or you get very low limits that don't cover the things you need to pay for. That's why I'm launching a community for entrepreneurs where you can learn how to get all of the money that you need to finally get your business to the level that you've been trying to reach. In the community, you'll have all of the tools and resources you need to get your credit from where it is to the 7 or even 800s. You'll learn the blueprint for your credit profile and business structure to make sure you get those approvals and at higher limits, as well as the step-by-step process for going to the major banks and securing anywhere from 20, 50, or even 100 plus for your business. You'll get weekly calls as well as business strategies to help you utilize the funding that you get to actually maximize the returns that you see in your business. Now, I'm Will Frazier, and for the past decade, I've helped consumers and business owners improve their credit profiles and get money for their business so they can get unstuck and see the growth they've been trying to achieve. And I'm here to help you do the same for less than $30. Just click the link to check out my community, and I'll see you on the other side. But let's continue. It says this number represents a 50% year-over-year increase. And of course, a 50% increase like that is extremely high. So basically what we learned from that right there is that in the first 3 quarters of the year last year, there was a whole bunch of loans that was given out by all these banks, and these are all major banks, and they had to basically take an L on all of that and write that stuff off, meaning they know that they lent out this money and now they won't get this money back. Now let's take a look at this next article, and this is going to sound better than what really happened, but let's go ahead and take a look at it. It says, why did Americans suddenly pay off credit card debt in November? Now, just thinking about that, I know you know that most people are not paying off that November. They're racking up debt because usually this is the time of Black Friday, and then going into December, you're probably racking up on a lot more debt too. So let's see what was going on. So it says here, the total amount of revolving debt, mainly credit card debt, again, held by U.S. households fell by $13.8 billion in November from October to 1.36 trillion on the heels of, so right after, a $15.2 billion gain in October. So there was a big gain in October, and then all of a sudden there's a big drop in November. And again, that doesn't really make sense based on the times. And again, now we're looking at that 4th quarter of last year, which we didn't hear about in the last article. So let's take a look at what was really going on at that time. It says, so what happened? Why did Americans suddenly decide to pay off their credit card debts? It may not have been by choice, economists said. Now, who would be forcing people to pay off their credit card debts? Now it says here in the third quarter. Now, again, this is around the time that those banks wrote off the $46 billion. Banks lowered credit limits and raised credit score requirements for credit cards, according to a November survey of loan officers by the Fed. So that pretty much means they lowered credit card limits, meaning they took people's credit card limits and cut them from where they were. And then they raised credit score requirements for credit cards. Now, again, all this is on the personal side, but this is still going to affect the business side, and I'll explain it in a second. Now, what that looks like is this. Basically, and you might have seen this during the time of COVID. Basically, if you have a $2,000 credit limit, what they'll do is as soon as you pay down that credit limit, let's say to $1,000, now you think you've done something good and your utilization is going to go down, your credit score is going to go up. Well, then they take the amount that you actually paid down by to, $1,000. And then they're going to lower your credit limit from $2,000 to $1,000, just enough to cover what it is that you have available or that you're using on your balance. And if you pay off the entire card, what they might do is lower it to even lower amount, whatever amount they deem to be useful to them at the time, because at this point, it's about, just like we talked about before. If you lent out a whole bunch of money and then you saw how the economy was and things are going up and stuff like that, you would get tighter about how you spend money. So what the banks are doing is during times of economic trouble, they want to tighten up what they are putting out there or giving out. So they want to lower credit limits. And the other part of that is raising credit standards to get approved as well. And what that looks like is the credit score that you need all of a sudden might be higher to get approved than what it was. The requirements for how your credit report needs to look might increase, and you might need to have a better looking credit profile. And then you might have to have the higher credit score and a better profile just to get the same amounts that you would have got at a lower credit score in a lesser profile, or still overall, you might still get a lower limit than what they would have given out previously. All of this is designed for the bank to cut down on their risk so that they're not overextending themselves and getting into trouble. And so it says the bank started to do this around the time of November after that $46 billion had to get written off. But now let's continue to read on and see what else it says. So again, the bank's lowering credit limits and raising credit requirements. That may have limited the ability of some households to run up credit card debt, even if they wanted to. Over the same time period, consumer demand for credit cards held steady, so people still wanted credit cards. It was just a lot harder to get them. Now, another factor that is said played a part is high credit interest rates. Around the time of November, they were pushing 21.5%, which we all know credit cards are going to have higher limits unless you get those 0% introductory periods. And it goes on to say higher interest rates and tighter lending standards have crimped borrowing. And they go on to say these factors are expected to limit growth to this pace in 2025. So it's saying that this pattern of tightening up on credit requirements and increasing the credit requirements and lowering credit limits on people's cards they already have and on the amounts they're giving out, that's expected to keep pace in 2025. Now let's talk about who this is going to affect the most and what you can do about it. But first, if you have been enjoying this video, make sure you give it a thumbs up so you too can know this is a good video to share with others. But now this is going to affect those of you who are entrepreneurs, small business owners, who are using your personal cards. And a lot of times you're also using your, house money, your savings to fund your business operations. It's actually going to affect you in a lot of different ways. One of the main things being a lot of you guys, when you are operating your business using your personal cards, a lot of times you're maxing out your personal cards, which is lowering your personal credit scores. And then because personal credit cards don't have as high a limits as business credit cards do, a lot of times you already don't have enough money available to you to do some of the things you need to do, like, pay your vendors or your workers on time, get large enough amounts of equipment or ingredients or inventory so you can handle large orders and projects. And you're pretty, stressed out and kind of frustrated having to juggle things all the time and robbing Peter to pay Paul and depleting your savings to pay your credit cards and get your score up. All of that, which goes into that strategy of using your personal cards. So imagine if you try to pay down your card one day and it'll make all of a sudden cut your credit limit in half or to a third of what it was. If things were already confusing and stressful, imagine how stressful things are going to get at that point. The way that you can avoid dealing with this potentially messing up your business is to get those business credit cards. The business credit card won't report to your personal credit, so however you use it, it won't affect your personal credit score. The business credit cards get higher limits, so you usually be able to get more of what you need for your business and have more available to you to pay your workers, and your business can be funding and taking care of itself versus you going to your personal cards and your personal savings and messing up that stuff. Again, these cuts are happening on the personal side. That's why this is going to affect you guys that are using those cards the most. But what's coming next is they're going to start tightening up on requirements on the business side too, as far as getting approved for these cards. I've already started to see this happen in November for some of my clients. I had one client that ended up getting a lower limit than expected. And while talking to the banker that I sent him to, I ended up finding out that the bank actually made some changes to what they look at and how they give out funds at that time. And it affected how much he was able to get. And as we just read, these trends are going to be continuing going into 2025. And I know for sure that there's a large amount of commercial real estate that needs to be refinanced in the first quarter. The first quarter is here now, and it's still not looking like that's going to be able to happen. And that's going to cause more pressure on those banks that are holding that debt. So basically, if you don't bust a move and go and get the business credit that you need now, then by the time you go to get it, the score requirements might be higher. Your personal credit profile is going to need to look a lot better. And even in that, you might still get a lower limit than what you would have gotten had you just been proactive on getting it done. So if your credit isn't where it needs to be, get your credit where it needs to be to get the funding you need. If your credit score is high, but your profile does not look really good, for instance, I just talked to somebody, they had like a 770 score, but they only had like a $500 credit card on their credit profile. And of course, that doesn't look good when you're trying to get high limits of funding. And that person didn't even get a low limit. They got straight denied with the 770 score. So if you haven't built out the credit profile that you need to have, make sure you build that out. And if your credit and your profile are already good, of course, make sure you have the proper business structure, because that can hold you back getting denied and getting low limits too. And just go ahead and apply and get the money that you need now. Now, if you don't really know how to get your credit score up, or if you don't know the proper blueprint to get approved for higher limits in your business structure or your credit profile, then I would advise you to join my new funding community that I actually just started today. You'll get all the info you need in a step-by-step process on going to the banks and getting high limit funding yourself. If you want to check out that community, it's down in the description. This week only, I have a special sale for you guys that are the first people to join the community. You can join for less than $30 and lock in that price for life. And on February 1st, that price is going to increase significantly. So you only have this week to take advantage of that price and join. And I promise you, there is no holding back. You get all the information that you need to get funding for your business and build out your credit profile, your business structure. All of that is in the community. Plus, we do weekly calls as well. So if you want to expedite getting that funding that you need to grow your business and have it self-sustainable, go check out that link below. And let's say you're in the situation where you have a business making high revenue and your score is low, but you do need to get some money for your business right now. You need to go check out this video so you can learn about this special account that might actually get you the funds that you need as fast as 24 hours. And I'll see you in the next one.